That's kind of my long and short on it. I think if people want to play around with it, great. I don't think there's really any substitute for owning, the best asset in the world. And by the way, the best asset in the world is going to perform incredibly well. So don't F it up and be greedy and try and get 2x incredibly well. Recognize that when you take on leverage, you take on risk. My view is that Saylor has actually done a pretty good job of financially engineering, kind of a levered bet on Bitcoin through his company. There've been a lot of people who've jumped into the space and are copying it, doing Me Too's, and I think there'll be a mix of outcomes in terms of how well they do it, how aggressive they are, what kind of debt they take on, how much they pay themselves in salaries, what their multiple of MNAV is, et cetera, et cetera. And, my caution to most people, I think I saw somebody on Twitter said, and this is not a knock on Dylan and Metaplanet, but I think I saw some young guy on Twitter say, well, yeah, I sold on my Bitcoin and bought Metaplanet. I thought, boy, you're really kind of missing you're kind of missing the theme here, dude.
Although it cannot create prosperity, the Federal Reserve can create money. Currency devaluation is a direct result of the current monetary policy trajectory, according to Lawrence Lepard. In order to boost economy and address deficits, governments pledge to spend endlessly. Lepard contends that the truth is considerably more dangerous. He thinks that since the debt load has grown so much, inflating it away is the only viable political and economic solution. He believes that there is no way for us to get out of this crisis without compromising the dollar's purchasing power. Inflation is the desired result and not a failure of policy. Without it, banks, pensions, and the entire leveraged economy implode when the debt falls on its own. If you're intrigued by bold predictions and deep financial insights, make sure to like this video, subscribe to the channel, and turn on notifications for more engaging content. Thank you for your support and enjoy the video.
In May, Powell's term ends, so he's gone. So Trump can't get him a cut because he's a Democrat and he's fighting Trump and he wants to be known as Volcker. So my sense is I lean towards the Fed not doing anything this year, but who knows? Obviously, some breaks are going to do something, but they've got a workaround to that, and they're talking about appointing a Fed president. There was a time, a new Fed chairman. There was a time when they were saying it might come as rapidly as in the next few weeks. Although the Senate walked that back the other day. Said no, it's probably kind of October-ish time frame. So and obviously they're going to appoint somebody who's extremely favorable to them. And I think what they've decided to do is pivot. They've kind of come to recognize that growth has to exceed R rates. And even if that's inflationary, they're going to take the inflationary pain to keep things going. I think that's why the stock market's at an all-time new high. And I think that's why I think that they are going to do that. And when the market becomes aware of them doing that, it's going to front run the Fed. And so even if the Fed isn't going to raise rates this year or even into next May, if they have a promise that come May, they're going to have, ZERP or 1% and a lot of money printing behind it in terms of QE, that might be enough to keep the market feeling good and continue to press these new highs. So to me, that's an enormous development. I retweeted this morning. Trump said something about, oh guys, this big, beautiful bill, obviously we're spending a lot, but we're going to make it up in growth. And it's really interesting to watch the way the whole story has evolved from Doge to hey, we're going to grow our way out of it. And okay, maybe you can grow your way out of it, but you can't grow your way out of it without inflation, in my estimation. So to me, that's the big story right now. We all know in this system, they cannot afford deflation of any way, shape, or form. And it takes deflation for that bond to rally. And I think that the policy response is just so obviously massive and overwhelming, and that's the point at which everybody goes, oh my God, they can never stop printing. It's Lynn Alden's, nothing stops this train. And at that point, right, at that point, basically what happens is, we get a melt up in sound money assets and a continued meltdown in bonds. But I think your analysis is right. I agree with you. I agree with you on a short-term basis. It's fascinating, though, how out of sync we are with the rest of the world. I wasn't aware of this, but if somebody pointed out to me, I was just at the show. And do you realize that in Switzerland right now, they're at zero? Yeah, they have zero interest rates in Switzerland right now. It's like, wow. And I was being pitched somebody who would loan me some money against my Bitcoin at, 200 basis points over zero. I was like, what?
Really?
Yeah.
Minus 1.13% 2-year note yield in Switzerland.
Most lending against Bitcoin right now is like
minus 0.13.
Yeah. Well, it's a Swiss bank, obviously you got to, there are all kinds of custody issues and everything else. But the point is that there are places where money is a lot cheaper than in the United States. And Mike, I'm very much aware of what's going on in China. I agree with you. I think you're right. We need a deflationary. Given how much debt we've taken on, given how big this bubble is, the backside of this bubble is massive deflation. But I also think the backside of this bubble is the big print. So, and how those two interact with one another, that's what we're all going to try and sort through. And it's very tough. One, because Trump has indicated he might back off of those tariffs. And two, because everybody thinks they're going to hold the feet to the accelerator on all these pro-growth policies, including deregulation, etc. And three, because buying the dip is a strategy that's worked over and over and over again, and it's going to be very, very hard to disabuse people of that notion. Although I'm with Mike, it feels to me like we're carving out a top here in the stock market. There's a very good pod that just came out with Adam Taggart and Michael Oliver, and Michael's a technician who does some really good work, and his momentum indicators suggest that we're kind of carving a long top, and maybe we go on and hit some new highs here. This kind of reminds me of 99, summer of 99, and things didn't really top until early March of 2000, and then they really didn't start to fall in a big way until 2001. So there's a lot of money in this economy, and it's sloshing around. And one of the things that Doug Nolan does something called Credit Bubble Bulletin. He showed on the most recent Z1 report all the growth in debt. People are just continuing to take on leverage because they feel like it's all good and leverage is going to pay to own these assets. So I think it's a bad strategy, and I pretty much share Mike's view on most everything except the long bond. I think that's nickels in front of a steamroller. With respect to what Dave said earlier about getting Powell out of there, I don't know. Yeah, they're attacking him politically in a lot of ways, but my sense is he is not going anywhere. He is dug in, and he's going to hold on to his ground, and would rather go down with the ship. Now, if something does break, and there's a chance that something will break, then he will start to cut. But I think there's a good chance we have him around for a while. It's a really fascinating mix and difficult to figure out. How this is going to play, but I think until proven otherwise, we have to assume the trend in the stock market for now is up. But I wouldn't be buying it, not at these valuation levels. I think the easy trade is gold and Bitcoin, or the easy trades are gold and Bitcoin, right?
Lawrence Lepard is still adamantly optimistic about Bitcoin in spite of all the ups and downs. He thinks it will beat practically every other investment over the next 10 years and is the greatest asset in the world. Lepard believes that Bitcoin may have a range of $200,000 to $500,000 throughout this cycle, but he anticipates a decline of 50% after reaching those highs. He believes that these significant ups and downs are a normal and beneficial aspect of Bitcoin's development. His key piece of advice is straightforward. Resist the urge to be greedy. Don't take on more than you can manage. Remain modest. Don't risk everything for a little more profit, and maintain a consistent Bitcoin allocation. To remain up to date on the most recent developments in Bitcoin, cryptocurrencies, and the digital economy, please take a moment to like this video, subscribe to the channel, and enable post notifications.
Sorry, my bad. Yeah, any organization that buys or supports Bitcoin, I'm in favor of. Okay, let me just start there. And obviously, Saylor, has got a great flywheel and has been an enormous positive impact on Bitcoin price, and the treasury market. My only cautionary note is just that these things are clearly worth 1x. Their MNAV. They're clearly worth what the Bitcoin is. One could argue that from time to time they could be worth a little less than 1x, and that's in particular because is management adding value and management's extracting salaries, and so. Owning Bitcoin in cold storage is still, in my view, the preferred way to play Bitcoin, and there's plenty of upside in doing that. You take a company, as Saylor points out, a company can do things that an individual can't do. It can issue securities, use them to buy Bitcoin, and so what you're really doing is you're introducing Bitcoin leverage, to the bet, and that's okay within reason. I think Saylor's been modest in the way he's done it. I think his debt is about 15% of the underlying value of his Bitcoin. The Bitcoin could fall in half in price and he'd still be okay. And some of the debt isn't callable, and some of it's in the form of preferreds, which I think is kind of brilliant. So my view is that Saylor's actually done a pretty good job of financially engineering, kind of a levered bet on Bitcoin through his company. There've been a lot of people who've jumped into the space and are copying it, doing Me Too's, and I think there'll be a mix of outcomes in terms of how well they do it, how aggressive they are, what kind of debt they take on, how much they pay themselves in salaries, what their multiple of MNAV is, et cetera, et cetera. And, my caution to most people, I think I saw somebody on Twitter said, and this is not a knock on Dylan and Metaplanet, but I think I saw some young guy on Twitter say, well, yeah, I sold him my Bitcoin and bought Metaplanet. I thought, well, you're really kind of missing you're kind of missing the theme here, dude. That's great. Yeah, right. It reminded me very much back in the day when Plan B had a model where they said Bitcoin was at 40, and they said Bitcoin's going to 150, and some of the young guys were like, great, and they, Binance would loan them, 4-1 against their underlying Bitcoin, right? And they went out and they borrowed against it, and of course the thing came down and they lost what they had. And so I would only say that leverage kills. And so I think it's an area that one has to be careful in. And if one wants to speculate in leveraged Bitcoin, have at it. But be aware that speculating in leveraged Bitcoin is not the same as owning core Bitcoin, in cold storage. They're two different.
And it's not it should never be your whole position, right? You say
Exactly.
have at it, but have at it with 10% of your.
Exactly. Whatever. Well, it depends on your risk preference, right? But I mean, the guy who sold all his Bitcoin to buy MetaPlanet, I was just like, oh my God, dude, why did you do that? I mean, MetaPlanet might be a fabulous investment. I'm not saying one way or the other. I'm just saying, we haven't seen a bear market in these things. I don't think bear markets have been outlawed. I think my personal belief is Bitcoin's going to go to somewhere between 200 and 500, but then it's going to correct 50%. And so we'll have to see how some of these companies that get too far out over their skis do, with respect to that kind of thing. So, look, I'm all in favor of an ecosystem that supports buying and holding more Bitcoin. I think having Bitcoin as your core treasury asset makes a ton of sense. I really like the ones that have other operating businesses and have cash flow.
Yes.
I mean, Semler, for example, they've got a business. They're making money.
MicroStrategy has a business.
Yeah, and to me, that's a big positive, because that guy can buy. If we have a Bitcoin correction, he's a buyer, not a seller. Whereas some of the other folks might be put into a position where they're forced to sell Bitcoin to buy back their undervalued stock or do something else. So, it's tricky. And all the frenzy around it doesn't feel quite right to me. The chest thumping and these things are going to the moon. That doesn't feel quite right to me. I don't like that. That reminds me of
altcoins. They're the ICOs of 2025, man.
Well, yeah, there was a video recently with a high-profile guy saying this is like the ICO market. I was like, oh, dude, why are you trying that? Because
I've been saying that since.
Yeah, why are you trying that comparison? So anyway, that's kind of my long and short on it. I think if people want to play around with it, great. I don't think there's really any substitute for owning, the best asset in the world. And by the way, the best asset in the world is going to perform incredibly well. So don't F it up and be greedy and try and get 2x incredibly well. Recognize that when you take on leverage, you take on risk.
According to Lawrence Lepard, he backs any group that purchases or advocates for Bitcoin. He commended Michael Saylor, adding that Saylor has been a major positive influence for the price of Bitcoin in the market as a whole, and that he has generated a significant flywheel effect for the cryptocurrency. But Lepard was a little cautious. He clarified that because management teams incur expenses and receive compensation, businesses such as MicroStrategy are only really worth the amount of Bitcoin they own, or occasionally even less. Lepard cautioned, however, that Saylor's level of discipline is not universal. Numerous businesses are imitating his approach without considering the dangers. He cited a Twitter user who, believing it to be a better course of action, traded all of their Bitcoin to purchase MetaPlanet shares. That individual, according to Lepard, totally missed the idea. He likened this conduct to previous cycles in which overconfident speculators took out large loans secured by Bitcoin, only to lose everything when values dropped. His main point is that you can be destroyed by leverage. Direct Bitcoin ownership is not the same as investing in businesses with leveraged Bitcoin exposure. He underlined that although Bitcoin will likely reach $200,000 or even $500,000 during this cycle, it would most certainly fall by 50% after that. Investors must be prepared for these changes. He came to the conclusion that although he prefers enterprises with Bitcoin treasuries, particularly those with actual cash flowing operations, there is just no way to replace having Bitcoin in cold storage. According to him, Bitcoin is the greatest asset in the world, and people shouldn't destroy its amazing performance by being avaricious and using dangerous leverage to seek out additional rewards. Please take a moment to like this video, subscribe to the channel, and enable post notifications for future Bitcoin, macroeconomic, and digital asset content. And as always, happy investing.